Hello traders, it's Giga from Get Funded Now. Welcome to another exclusive interview with one of our traders. Today we will be joined by John, who secured an impressive payout of $7,830 trading on the gold market. His trades had a very high win rate, more than 75%. A lot of it has to do with his trading mindset. We will look at his trades and he will share his insights and tips that will certainly help you become a better trader. So without further ado, let's just jump straight into the interview meeting. Welcome, ladies and gentlemen. I'm here with John Taylor. We have an exclusive interview prepared for you. He achieved an impressive $7,830 in just 14 days, and he only traded gold. John, can you tell us a little bit how you're doing today after the payout?
I'm feeling very good, thank you.
I wanted to do this interview. We had a bit of a discussion before it. We had a quick chat, and I get a feeling that your success, it wasn't like just about the numbers. It was about the strategy and especially the mindset behind why you're taking trades. And also, I found it really interesting that you're only trading gold.
Yeah, so I only focus on actually trading gold. Like, I do watch other markets. However, when I'm coming to actually placing trades, I only place gold. Only place trades on gold.
Okay, has that been like since the start, or have you
Yeah, so since the start of my career, at the start I did trade multiple pairs. Like, I was a multi-asset trader. However, I really just like focused down onto one pair, and that's been gold, because I've been able to watch gold for the whole time that I've been trading, and like I haven't missed a candle on it. You know, some traders literally will watch the chart every day, and I'm one of them traders. I'll sit and watch the minute chart on gold like the whole day.
Yeah, I've noticed in our community there's a lot of traders who trade multiple markets as well. But I would say that I myself am the one who trades only one as well. I only trade S&P, and I feel like if you only focus on one market, you get to know it really well, and that can give you an extra edge. You know what I mean?
100%.
So yeah, your profit factor 2.33, your win rate above 75% across the board. So I think that's like really good. I think it's going to be really interesting.
It is decent. The win rate and profit factor was decent. However, like, I'm not being one of them people that said it could have been much better. It was at 100%, but I decided to change because I risk around the same amount. It just depends on whether or not I'm willing to risk more on the pip side. Well, I'll never change the percentage of what I risk. Like, the dollar amount will always be the same, but this is why my profit factor is different, because sometimes I will use the stop loss and sometimes I won't use a stop loss and just close manually. But I'm just looking at value areas and understanding whether or not here would be a good place to close a trade, or if I should hold on to the trade. And that's why it may seem like it's a unique style.
Yeah, that's I think that's really interesting, and you have quite a career behind you already. You're not just starting out. Like, there's some years on your belt already. So I think it's really. Sorry, you wanted to say something?
Oh no, I was going to say, so I've been trading for around 6 years actively since I was 18, but I've been learning for around 8 years.
Was it it would be interesting to hear, like, how was your experience with Get Funded Now then? Because you're not just starting out.
Amazing.
You know what you're looking for. And how was it?
This is the first prop firm I've been with, to be honest. I have tried other ones before, but I never really liked them. Like, I was just doing a paid plan for one, and then I did try FTMO before, but never actually like stuck with it. But yeah, this was the first prop firm that I actually stuck with to get funded with, and you guys are amazing, to be honest with you.
Thanks a lot. We really appreciate that, John. We really appreciate it. And I'm sure that everybody watching this are pretty excited for us if we can hop on the charts. So I would ask you if you could maybe share your screen and we can just have a look at a few of your trades. I know we spoke about one trade, like your biggest trade that you had on gold. I think it was in 16th of Feb. Maybe we can look at that trade. We can look at a couple of others as well.
I'll share the screen now, yeah?
Yeah, perfect. And also, it happened pretty quickly. It was, I think altogether it was 15 days for you to achieve the payout. So that was was really good. I can see that you are managing your risk well, like you know what you're doing. So it's
Yeah.
very interesting.
So basically, I saw that I don't trade the news obviously as well.
Okay.
Let me just delete
Yeah,
this.
maybe you can start with that. You can tell us like your overall approach. Like, how do you approach the analysis? Do you have like different approaches to it, or?
Yeah, so I have two styles of trading. Well, I believe the market is either in two ways. It's two phases. It's either directional or consolidation. Like your market will either consolidate or it will be making the move, like a directional move.
Okay.
In other words, it's balanced or imbalanced.
Okay.
So once I decide, once I've figured out what way I think the market's going to go for the day, the week, the month, like is price balanced, imbalanced, what is my bias, then I'll look for my trading opportunities.
Okay, so if I understand correctly, you have two styles of trading pretty much.
Yes. It was the 16th of Feb, right?
It was on the 16th of Feb, yeah. It was on the 16th of Feb. You opened the trade at 1998.
I'm struggling to move the actual. Sorry about this.
No, it's all good, man. It's all good. Take your time.
So yeah, I'm pretty sure this is around here. It was this here. Perfect.
Yeah, that one. You said you're not trading the news, right?
Yeah, so just before I caught the move, the news was coming out.
Okay.
I was holding buys here, but when the news was about to come out, I had to just get out at a quick loss. So and this is what started to, I had 100% win rate, but because I don't trade the news, it keeps messing up my win rate. Like I won't hold through the news. So I closed with a loss. And then because I'd already taken that loss, my win rate didn't matter to me. So I started to use my stop loss quite tight and use an increased lot size. So whereas I'd use probably like half a lot and just let it run and close manually, this time I started to just take like one standard lots with stop losses, risking 0.5%. And my first trade actually hit stop loss, but when price bounced here, and this area, you can't see it on this chart, but on my other charting software, you can see this area right here is a massive point of control for the last 6 months.
Okay.
So when price bounced from this point of control, it was a very good sign to me, especially after the news came out and I saw all of this volume, that we were most likely going to continue up. Like I said, my bias was already directional. I already thought we were going to continue up for the day. That's why I was holding the buys here. But because of the news, I could not hold that. So I closed with a loss, waited for the news to come out, saw it bounced here and started to scale in positions. I did have quite a few lots in here, but when we pulled back, it hit all my stop profits. And then I had to basically have some minerals and get back in. And I did. And that's when we held. But the only reason I didn't hold this for a couple of days was because of the news that was due to come out. Like I said, I won't hold through the news. So that's why I made what I made, a 1 to 10 nearly, I think. Sorry, a 1 to 3 on that trade, not 1 to 10.
Yeah.
I was trying to make a 1 to 10 on the first move up.
Yeah.
But when it came down and my stop profits got hit, that's when
you would make 1 to 10 on the first one if it wouldn't pull back.
Yes, I would have. I had loads of lots in there, but.
And also, I think it was a good move to take those small losses before the news release, because if you would left that open, that could make a dent, right? Because it really rejected heavily.
Like I said, I've been trading for a few years now, and my personal experience is just don't trade the news. Even if you take a look at all of my trades, and then when the news come out, if I would have stayed in, I would have made money. It's just I don't trade the news. Even if I get the direction right of the news, I'm not going to trade it because it's just uncertain volatility in the market. There's no point trying to trade it, basically.
Yeah, I think this is really important to recognize, because you actually just demonstrated that you don't need to catch like the initial the initial reaction of the news release, because some people are trying to catch that and they lose money. They lose accounts as well.
Yeah, exactly.
And there's going to be plenty of a move that you can capture if you know what you're doing, and that's exactly what you did.
100%. It was a great trade, to be honest. I was upset when I didn't get to stay in at the first time because I had around about 8.5 lots on. I'd scaled in about 8 lots on the way up, kept putting my stop loss in profit. And then when it came down, I was gutted because obviously I knew how much upside potential this pair had. When it bounced off that point of control and we wasn't happy there, we were seeking value higher. And it was just obvious to me whereabouts we might end up going. But because of the news, I can't hold it. So yeah.
Let's you know what? Let's draw it there on the chart just so people can see. Can you just draw an entry? I think it let me just check. I'll tell you exactly where the entry was. The entry was at 98.
98, yeah.
98.29.
I'm trying to get the drawing tool up, you see.
Or you can use the trade one above if you want. This one. Wait.
Sorry.
1 second.
Ads.
Sorry.
I
don't know why I can't draw on your screen, but it's just above this one. You see, it's a trade. It's a long trade. Just on the left toolbar, the one above the paintbrush, the button.
Oh yes, of course, yes, yeah. The long tool position. Yeah.
Two down. No, 2 down. Yeah, but it is the one. Just 2 down. Now you're on the third. This is the Fibonacci's. Just that's one more. Yeah, that one. You got the longs and
Thank you. See, it's on the web version, and you said it was 98.
Yeah, 98.
To what price? 98. What? 98. 2.
2.9.
2.9. And then what price did I close?
You closed it at 2013.
2013. It was around.
Yeah, and also there was just one position, and then you had another position from the same prices.
Yeah.
That made another grand, and then you had 2 more positions. Like you said, but basically this was the move that you really took really good advantage of.
And then this one I closed at what? Sorry.
You closed it all at 2013.
Oh, all of them, yeah.
Yeah, because you were pretty loaded there, and
I remember now. It's because of this. Do you know what? When this happened, I was quite loaded up here, and I had to close with a loss. And then I loaded back up, and it hit me out with stop losses. So it wasn't a good trade, but annoying. I should have made a lot more on it. But it was a good trade, nevertheless. I can't remember how long I was actually holding it for, but I think it was a couple hours.
Yeah, it was. Let me check.
Was it quick? I did hold on to that, I'm pretty sure.
No, you held into it. It was like 5 hours.
Yeah, it was a hold and a half.
Yeah, you held it pretty long.
Like I said, if I was happy to trade news, I would have just held it for a couple of days. But I think personally, what I did there, making 100 pips on it, was nice. Yeah,
of course, and a very substantial payout as well. Like it all adds up. So I think this was a beautiful one. This was a beautiful trade, I would say.
Yeah, it was a very nice trade. Appreciate it. Thank you.
So basically, if we just summarize it.
Yep.
You are aware of the point of control on the 6 months.
You see it here, this red line.
Okay.
So we didn't bounce off of it, but we bounced near enough to it. And when it started to, obviously I read the volume here, the volume spiked. When the sellers got absorbed, I saw the buyers start to run over the sellers and start to move the market up based off the volume. So obviously a stack of sell imbalance followed by a bunch of buyers bouncing at this area. It was just an easy sign for me that we were going to go back up. Obviously, I'm already looking for price to continue up. It's just when news came out and we had that bounce, it was clear to see for me that we're going to go up. And I just followed the order flow.
Maybe even because the sellers weren't really able to develop momentum after that news release. They did sell off, but then they got
sold off. They come right. Yeah, see, I was being careful when it did this move. I knew that when it came down and pulled up, I was probably right. But if I am right, it has got to come down and take some liquidity. And that's why I got stopped out the first time. But then having the ability to get back in was what the hardest part about this trade was, because like I said, I closed out the news, then took a loss, then got stop profited out, and then had to get back in again. It was actually quite a battle.
The timing and the mindset, man. Like, I think you gotta have pretty strong psychology to keep re-entering like that and keep believing your thesis. And
100%. Because at that time as well, I'd already taken around a 1% loss. I was down around 1% on the account. Like, I was in profit on my account, but I'm down 1% for the day, so I was negative about $1,000. Like, I've lost $1,000 at this point. So when I've scaled back in, I knew that I'm only risking $1,000, like max, 2% on the day. So it was very hard. I only had 1% to risk, and I wanted to make some good gains from it. But that's what I'm saying. If I never got in here and just waited, I probably would have been able to smash this one with a 10 lot and a 10 pip stop loss. But life circumstances.
Yeah, of course, because you would have more bullets in your
exactly.
Yeah. I see that. Yeah, that's very well. Would you maybe have some advice for the traders how to like kind of manage those emotions or whatever? You think that's just strictly just experience, or like what did you do to kind of grow to a trader that you are right now, that you're able to re-enter, able to hold?
Do you want me to stop sharing the screen, or should I continue?
No, you can leave the screen on.
Okay.
Doesn't matter.
Yeah, no, because I can probably give an example. So, you want me to just give some tips?
Yeah, that would be perfect. Or if you can give an example as well, or if you want, we can look some other of your trades if you want.
Obviously, I'm sure people can gather what I'm saying. I don't trade the news. Just an easy tip. Even if you know what's going to happen, don't trade it, because it's just volatility that can take you out. Especially if you have not got a big account, it's not worth trying to hold trades in the news. That's a big tip. Also, prices either going up or down. It is pretty much 50-50. It can either be consolidating or directional. Do you know what I mean? People like to say it's accumulating, manipulating, distributing. And yeah, you can find these things, and there's all sorts of stuff out there. But the easiest way to look at the market is it's going up or down. And at the moment in time you're watching it, it's either going to be staying in a range or finding a new place to range at. Price is either seeking value or is happy at value. Price is either balanced or imbalanced, looking for balance. Is that a good tip?
I think that's a perfect tip, man.
I think that's a pro tip.
Yeah, the pro tip. Yeah, the institutional tip.
Institutional tip.
Yeah, I think so. I think so as well. I think if you kind of simplify it like that, it makes life easier a lot.
Well, also, I don't really trade with a stop loss. I'll manually close my trades a lot of the time. Obviously, sometimes I'll trade with this. When the news just got released on this particular trade, I had stop losses in. Like I said, I lost 0.5% on one position, then my stop profits got hit, then I had to get back in. But more often than not, I'll just take small size positions where I don't have to use a stop loss. I don't care about pips, I care about percentage of the account. So if I know that I want to risk $2,000 and that's my max risk, that's it. I don't really mind about how many pips I go into drawdown for. It's just about making sure I don't go negative $2,000 or more. That's
so you basically just calculate your lot size based on how much you want to risk at a given trade, and then
so I like to give myself at least 40 pips of room, like, because obviously here when I got in, I wanted to obviously have as tight as a stop loss as possible, but realistically I knew stop loss should probably be a bit low. But I was using a tight stop loss. It's just if I never took the losses beforehand, I probably would have scaled in very small positioning with no stop loss and just scaled in with profits. Does that make sense?
Yeah, makes a lot of sense.
Once I have taken that initial loss, I'll now have to use a stop loss to make sure you don't go any further.
What about managing your emotions in those situations?
I'm completely emotionless, to be honest. It is what it is. You have your trade, you have your stop loss, you know what you want the price to do, or you know what you think price is going to do, and you just stick to it. There is, like, when you trade with no stop loss, you need to know exactly what you're doing. Like I said, I may not have an ideal price that I want to get out at. I may know, because for instance, when price came down here, we could have sat here at value and built value, and then I could have seen the order flow and we could have built back up, and I could have held that trade in drawdown until it came back up. And that's what I'd usually do. I'll watch price and see how it reacts at different value areas, and then determine whether or not I should hold my trade, scale into the trade, or close the trade. But there's no emotion when trading. It's literally that simple. Price is either happy or it's not happy. If it's happy, it's going to stay there. If it's not happy, it's going to move to somewhere where it is happy.
You do make it sound really simple. So but I think that a lot of traders from the community do struggle with this. Some people can get really greedy.
Yeah. It took me 8 years. It took me 8 years. I did not get here overnight. It's took me literally 8 years.
I just wanted to point that out for everybody that's watching. Like, this is you do need some experience that you're able to manage your emotions in those situations. But as the experience comes, as you said, I think the crucial thing that you're able to achieve that is that you're definitely sure that you know what you're doing, you know what you're looking for, you know how to analyze market information. And if you get an information that maybe you should get out of the trade, you get out. If you get the information, look, you should stay in. It doesn't matter, draw down or not. If the information is there that you should stay in, you stay in. So
that is the most important part. Your job as a trader is just to understand the information presented to you. We do not have crystal balls. Everyone says it. We cannot actually predict where price is going to go. You can just have a good edge as to understanding where it's likely to go.
Yeah, that's I think that's a perfect summary. But what about, like, for example, you said you have two styles, right? So basically, you trade when market is looking for value, when it's directional, or maybe when it's happy with the value to transact. What happens?
If price is ranging, if price is happy at value, if it's consolidating, I'll just trade the range. If I think the price is going to stay in between this value area, I'll just trade around that value area, a few pips. I pretty much risk the same every time I trade. It's just the amount of profit and pips that I'll get will depend on the bias of the day. Like, I might only take 20, 30 pips every time I place an order if it's a range-based day. However, if it's a directional-based day, then obviously I'm making 100 pips in my trade, or 120 pips. They're my two styles basically. It's just trade the range if it's consolidating, and if it's imbalance, searching for balance, just know where the balance areas are. So if price is moving up from this current area of balance, where is the next new area of balance above or below? Do you know what I mean? So I know that when we come up and hit that, if we stay there, we're likely to build more value there. If we bounce from that, we're going to come down and come to the one below because we weren't happy here. So we might not stay here. When we come down, we'll come through. There's theses that you put together, but it's just about understanding where the core value is over the whole chart. And I don't necessarily just look at time frames. Like, I'll use a 3-minute chart on TradingView. I'll look at the 1-minute chart on my phone. I don't like trade from my phone, obviously. It's just looking at the 1-minute chart on my phone is very helpful just to see exactly what's going on. But pretty much just a 3-minute chart on TradingView, and then volume-based charts on Sierra chart, obviously.
Yeah, for the profiles and that's
Renko bars and so on.
The order flow tools.
Yes, the order flow tools.
That's perfect. I think that was really insightful. I think it's really important how, like, that you shared. How do you manage that psychology? Like, it does take time, but
I hope it helps everyone out.
Yeah.
I weren't sure if this was going to be very beneficial for your people, but I tried.
Yeah, I think it will be, man. I think it will be. You shared a lot of valuable insights, and I think it's really important to for our followers to see, like, what is achievable. And for example, this trade that we just shown, it's a lovely trade, and I think that it's important to show that you don't have to catch the precise news release minute, because that's basically kind of like gambling.
Yeah, it is 100%.
And
especially if you don't know the outcome. If you don't know the outcome, 100%.
Yeah.
I do pay attention. I'll give one more tip as well. Interest rates, obviously. So, like, because I only trade gold, I'm just focused solely on the dollar. So when this happened, I knew the dollar was bullish as well, massively bullish. So when it come down here, I'm expecting it to come up, you know. And they're not planning on cutting interest rates anytime soon. And there was a few other things going on, but basically following the geopoliticals, the economics and the fundamentals is very important just to understand as a whole. Even though I don't trade the news, it's still very important to understand. Yeah,
definitely. I think it's important to have, like, that economic contextual picture in mind always, especially with a thing like gold.
100%. 100%. Obviously, paying attention to the DXY, just understanding how well the dollar is doing is great. But this is what makes it easy for me to trade gold, because there's a few things that you have to pay attention to on that aren't, like, do you know what I mean, the DXY and a couple of economical things. But other than that, there's only like people, when Putin invaded Ukraine, like, you can still catch moves. Like, I made a lot of money off the wars, like, as unfortunate as that was. Maybe cut that bit out, but basically the truth is I saw what was happening and I knew what to do from my standpoint. Do you know what I mean? And the only time it's kind of uncertain to trade is when a war breaks out, but even then it's kind of obvious what to do. Do you know what I'm trying to say?
Yeah, so, absolutely. Like at that point, it was pretty obvious that we're not gonna have directional upside moves on the equities and on energies.
Yeah, you know what I mean? So that's where, like, obviously the only thing you haven't got control of, obviously you ain't got control of the market. However, you don't have control of when someone invades another country. However, when they do invade that country, it's not the hardest thing in the world to understand what all these markets are going to end up doing.
Of course. Yeah, I think that's not just us traders. I think everybody knows that major economic, like, crisis like that will impact your lives in a aspect of lives one way or another. Like inflation impacted all of us. I think you can close this the share screen now. This was really good, John. Thank you so much. Let's just finish off with a couple of more questions if you're up for it.
Yeah, 100%.
I just wanted to ask you, like, would you recommend Get Funded now to other traders? Obviously, that's important to us.
Yeah, 100% without a doubt. That you guys are probably, in my opinion, the best in the industry. That's not me just saying that. That's from what I've learned and realized and come to notice from you guys, especially how well you treat your customers and your traders.
Thanks a lot. We really appreciate it. We really try to provide like the best support, be as quick as possible on the live chat, on the emails.
Yeah, it is quick. Everything's quick. Payouts fast. Everything approved nicely.
I think it also shows that we're traders ourselves. Like CEO, me, and
I do like that.
World traders. So we know what the traders need to succeed. So I think that's really important, and I think that's really missing in the prop firm space. Like, yeah, that's beautiful, man, John. Let's just finish it here. We wish you all the best with your trading journey, and hopefully we'll do some more interviews in the future, right?
Oh, 100%. You'll have me back.
Enjoy your day.
Yeah, thank you very much. Have a good day.
And there you have it. Thanks for watching. Impressive payout achieved with disciplined approach and focused mindset. Very well done. As we wrap up, I encourage you to reflect on the lessons learned and apply them to your own trading. Stay tuned for more engaging discussions and valuable insights from us at Get Funded Now and all our valued traders. Until next time, good luck on the charts and happy trading.